Scott Wren, Senior Global Market Strategist at Wells Fargo Investment Institute, joins us. Scott, it's great to see you again. What do you think? Tepper's been pretty adept at simplifying the message from central banks. It worked for him on the upside with QE, and now he appears to be playing the opposite view. Does that all make sense to you?
Well, Carl, I tell you, don't fight the Fed. That's, how many times have you heard that over the past decades? It's true. We've been trying to play defense since really March or April. We're not having conversations at the investment strategy committee level on how we're going to hide more or get more defensive. I mean, I think we're good where we are with that, but we would expect a little bit more market downside here. But what we're talking about is, what do we do in anticipation of the economy recovering? What's the timing on that? When do we get interested in small cap stocks and high yield bonds and consumer discretionary sector? That's the conversations we're having now. And we've had a little bit of difficulty pinpointing when the recession is going to start. We certainly think we're going to have one, a moderate one. And so for us, we're not trying to hide more, get more defensive. We're looking for when we're going to get more assertive.
I'm thinking the way you're describing that thought process kind of takes you back to the October low, right? When people did start to give small caps a second look. I wonder if you think that's going to be instructive in Q1, if in fact there's further weakness.
Well, I tell you, you have to look at levels. I mean, my entire career has been based on fundamentals and technicals. You got to look for your spots, and those October lows, that's one spot. And then really, if you look below that, if we didn't hold there, I would argue somewhere in the 3250 to 3270 range for the S&P 500. So, those are spots that we think the market could definitely trade to. We have some things we're thinking about doing at those levels because we think valuation levels are going to be attractive there. But I think one key, Carl, for us, big key, is that we expect to see inflation come down pretty quickly next year. We expect the Fed, maybe they've got 75 or 100 basis points left in terms of hiking. I don't think that's out of whack with what the market's been expecting. And then we expect the Fed to maybe cut 75 basis points or so in the second half of the year in response to this moderate recession we think we're going to have. So that's kind of the track we're looking at as far as over the next 6 or 8 months and the types of things we're looking to do.
Interesting. That view on rate cuts, what do you say to people when, or what do you say to David Tepper when he says they're telling you they're not going to do that?
Well, I tell you, sometimes you think you have to take the Fed at their word. If you look at their track record, they're not very good at projecting what they're going to do. That can change, as you well know, Carl. That can change at any time. So what we're trying to do is just figure out what are the fundamentals going to be. And if inflation does not come down, well, the Fed's not going to cut, but that's not our base case. So we're expecting a reaction to that moderate recession. We think we're pretty close to the end of this hiking cycle, although, the Fed's still talking tough. But even if you look at the median dot plot, 5.1 for the terminal rate, well, 5% is pretty much what the market's been expecting. So we don't think we're going to go much above there. Probably not hardly any there at all, above there at all if we get there. But things are going to look better in the second half of next year. I think the market, if you think the market normally turns higher about halfway through the recession, and you thought the recession might start pretty soon and last until June, July, August, something like that, well, then, maybe you start to get more interested in things in March, April, because, if you wait till the skies are clear, the market's going to be higher.
Scott, appreciate it very much, as always. An important day today.